Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of The Trading Floor with your humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What's going on, my friends? John Compton is here. John, how are you? Made it to the finals, man. I love it. Justin Linderman, how are you, my good friend? Pat Kaufman, hope you're doing great. Rick, Robert Meek, Sam Rose, Stan the man, hope you're doing good. Bill, Gail, Guy, what's up, Guy? Hey, Guy. He said, my bracket is dead. My bracket is most certainly dead. Man, I don't know how many people have Wisconsin and Duke in their finals. I most certainly do not. That is for sure. But, man, good weekend. Good weekend. Today is Mentorship Monday, ladies and gentlemen. You guys know that? It's the first Monday of the month. How exciting. I'm super pumped. So, as always, we're recording all 3 hours of today. And today's going to be a little bit slower as far as maybe exact trade setups and things of that nature, which I don't think is necessarily a bad thing. Just kind of letting you guys know, it's going to be a little bit slower for my more active traders. I hope to just kind of reiterate a few good things, kind of go over maybe a few new things and just help out any traders who are brand new to real life trading or have never traded the market before, or maybe just brand new to this room. Because there are a lot of nomenclature and things that I talk about. So if you guys have any questions at all, today is the day to ask them. Especially if you're newer. And you're like, Jeremy, I've always been wondering, what the heck does this mean? Yeah, today is that day. So, no judgment zone whatsoever. If you're newer, you have a question, you want an answer, today's a good day to ask. I guess that's kind of what I'm getting at. So, in the spirit of trading, let's just talk a little bit about trading, shall we? Let's discuss a little bit about what we do in the afternoon floors and the morning floors. Is we do set up a lot of day trades. The morning floor, I imagine, is probably, I would say, 98% day trades. Brad doesn't set up that many swing trades, which is okay because in the morning, the morning is not necessarily the best time for swing trades. It can be, but the morning floor is 98% day trades. Every now and then, if he sees a good put sale or bull put spread or swing trade, surely he'll kind of write it down and talk a little bit about it. But the morning floor, which is Tuesday, Wednesday, and Thursday, from 8:45 Eastern to 11 Eastern, is 98% day trades. In the afternoon room, I would probably say it's about 60-40. So 60%, and I always kind of go back and forth on this percentage, so I'm trying to keep this as close as I can, but really about 60% is swing trades. We do talk a lot about swing trades because the afternoon is slower for day trades, and that's one of the reasons I like afternoon day trading. I like afternoon day trading because I can go through the list, look at the gaps, see what's moving. I can already understand a little bit about what the market is doing, what I want the gaps to do. The morning trades definitely have the opportunity of being more profitable in the long run. You can get more R's every single month. But in the afternoon room, we do talk a lot about swing trades. And so I want to make sure we get that message out there because there's a lot of traders who are like, well, I don't really want to take your room because it's all day trades. It's really not all day trades. We do a lot of swing trades. Bull put spreads, covered calls, put sales, longer term trades, that type of thing. So something to keep in mind. The other 40%, we do go look for day trades every single day. So I would say 60% of the time, I'll go look for the day trade. And if the day trade's not there, and if there's a swing trade opportunity, I'll look at it, I'll talk about it, I'll write it down. We'll see what's going on. But that's really kind of about all the process that we do. We go look for, of course, gaps. What's gapping? What's moving? What is trapping people? What is scaring people? And we go look for opportunities based on those gaps. So here's the gaps in the afternoon. And, these two lists are entirely free. barchart.com/stocks/gapup.php. And same thing with the gap downs. barchart.com/stocks/gapdown.php. And we just go and look and we see what's gapping. What's it doing? Is it trapping people? Are people being scared? Are people scared? And what's going on? So you can see what's really interesting. 3 of the top 4 gaps are airlines. So we would, this situation, go in and look and see, all right, well, Southwest Airlines is gapping down. That's a pretty healthy gap, in my opinion. It's pretty decent. We're looking at this gap and we're trying to understand, well, what makes this so interesting? Well, you have a support line, obviously, that I've drawn in here, about 42.80. That's one thing, so you're gapping below the support. Number 2, you're clearing all of these wicks, all of these pivots. So this is when the stock has been bouncing and it's gapping below there. So what makes that interesting and what makes that unique is that the fact that it clears pivots. Zane says, that gap is so good, I'm considering writing a new rule. What's your new rule, Zane? I'd love to know about it, man. But this is good, right? This is a nice, it's not a huge gap. It's not sensationally massive. So the gap today, you're down, we're at 41.21, so it's down about 3.85%. So gaps don't have to be insanely massive. Again, right around 4% is about as small as I like to look in the morning. If I'm looking in the afternoon, we can understand sentiment a lot better. But what's really, really the most important aspect of any gap is location. That's really the most important part, is location. And by location, what we mean, and what I mean, is who is losing money and who is making money. More importantly, who's losing money. That's the one that you really, really want to keep in mind, because people who lose money react much differently than people who make money. People who lose money are scared, right? They're afraid. They're worried. And they react emotionally. So they'll jump out really quick. They'll exit really quick. Their stops will get placed, whatever it is. They get worried. And when you do that, when that happens for traders, the main thing to do is act upon their emotions. Figure out, hey, what's going on? What are they feeling? And sometimes, and oftentimes, what's easiest is if you can say to yourself, how would I feel in this situation? How would I feel? What would I do? So if you bought Southwest Airlines right here, and the stock went up a little bit, and now today you're down here, how would you feel? Well, you'd feel like a sad panda, because you'd be losing money. And more importantly, you would likely have had your stop somewhere right about here in the red line. That's give or take roughly where you would have your stop. So the fact that it gapped down below there means that it's trapping people, means that people are losing money, means that people are going to be reacting with an emotional caliber, and therefore we should be looking to figure out who's losing money and trade in that direction. So we're going to be looking for a short trade. So very often, you guys will find me doing this setup. I look at the daily. So I look at the daily chart first. Then I go into the 5 minute. So I go daily. Then I just go hop into the 5 really quick to see if there's anything there. Then I go to the hourly. Then the 15. Then back to the 5. That's usually step by step. Very often, I would say high 80%, unless my brain's doing something different that day. High 80% of the steps I go daily, 5, hourly, 15, and 5. Because I want to see, is there anything setting up? Is there anything looking interesting? So here's the 5 minute on Southwest. There you go. So here's the 5 minute. And the 5 minute, again, this is hindsight. Hindsight is 2020. But having a short into this area would have been semi-difficult not to do, I think. Here's your exponential moving averages. Right now we're getting towards the low of the day. So we're going to hang out down there for just a moment. So if what you're looking for on gaps is you're looking for what direction to go and why. What direction to go and why. And the majority rule says take the trade in the direction of the gap. That's going to be the vast overarching rule that you really want to keep in mind on, is take the gap take the trade in the direction of the gap. So here's your 5-minute chart right here on Southwest Airlines. So what you're going to understand is you're going to ask yourself, what direction is the trade? So this stock gaps down. Okay, so we got down on the daily. So we're going to be taking this trade bearish. We're going to be looking for a bearish entry. Now, secondly, you're going to ask yourself, what type of trade do I take? Well, this is a black candle. The prior day was a black candle. So we know, based on that information, that some of the traders are profitable already. So when it gaps down, you're going to be expecting some type of buying pressure at some point, because that's how bearish traders exit the trade. Bearish traders buy to cover or buy to close, causing the stock to go up a little bit. Here's a visual representation of that happening. Okay? This, the first 5-minute candle, is everyone freaking out, getting their stops hit, getting worried, panicking, and exiting the trade. Type in a 1 if that makes sense to you. That's usually the first 5 minutes. And there are some day trading opportunities out there for that. There are. But the first few minutes are usually the people just freaking out. Logging on to their iPhones, they're at work, they're just wigging out because the stock is hitting their stops. It's gapping, where they don't want it to gap. It's going too far, and so they're getting worried. So they exit the trade, and that's that. So when they start exiting the trade, you have the short sellers sitting there who are already in. Okay, so keep that in mind. They've already been in since yesterday. How do we know that? Because yesterday's candle was black. It was a black candle, so we already know that there are some short sellers here. So all they're doing is sitting back waiting for the stock to go a little bit lower so they can start buying it. And that's what this wick is right here. All lower wicks, all of them, are created from buying pressure. So you have buying pressure coming in. Southwest Airlines, those are shorts buying to cover. Let's see if I can actually make this a visual representation for you guys. Short traders buying to cover. Okay, I'm going to put this here. I'm going to draw something for you guys so we can just kind of see it. There's the short traders buying to cover. It's an ugly brown. Oh gosh, I'm trying to change the color. This is always a mission. All right, there we go. Short traders buying to cover. That's what it looks like. That is exactly when it happens. So when you're doing a retest gap is when the candle is black and it gaps down, or white and it gaps up. That is a retest gap. And we're going to cover that just a little bit more in depth in just a little bit. But it's a retest gap. Black candle gaps down. It is a retest. So retest means wait for the stock to retest. Wait for the short traders to buy to cover, causing the stock to go higher. And what you're looking for is you're looking for a reversal candle pattern on or near the 10 exponential moving average. That's what you're looking for. So, ladies and gentlemen, go ahead and tell me what type of reversal candle pattern is that at the 10 exponential moving average on the 5-minute chart. What type of reversal candle is that? Maybe you have your own word for it or your own definition, which is fine. Doesn't matter to me. I mean, you could call that the mashed potato and gravy dance. Your call. So let's try to zoom in here. I know it might be kind of hard for some of us to see, so I'll zoom in just a little bit more. So this candle is one of my favorite, probably my favorite reversal candle. If I have to pick one, it really is kind of my favorite. That candle is a one black crow. One black crow. It's a black candle which opens and closes lower than the prior white candle's close. And it's occurring at the high of the day, and it's occurring at the 10 exponential moving average. Does it make sense? So what do? You've got to take that trade. It's almost a requirement. Have to. Have to take that trade. So it looks like this. Your bearish entry is below the low of the one black crow candle. So once that candle forms, you have an idea. Okay, here's the entry. Here's the stop. Beautiful. Pinpoint. Money all day. Great location. And for day traders, guys, this is really all you need. You need to find this one gap. This one gap is all you would have needed to find today, and you're good to go. There's so many things out there gapping. You find the candle that just has a good location. It has a good gap. It's trapping some people. It's kind of, there's nothing really around it. And you play it. And this is your 1R risk. So 1R, that is your risk units. Risk unit, that means that has how much money you're going to be risking on this particular trade. Your R's do not change. You're going to stay the same. Your R's stay the same. So your R is 1% of your account value, 1 to 2%. Totally your call. You get to choose. Most people choose 2%. All right, so 2% of your account value is 1R. So if you have a $3,000 account, this R equals $60. $60. So you just simply calculate. Okay, you say 60, and you divide. You take out your stop value, 41.91 minus 41.75. So you take the difference between your entry and your stop to come up with your stop value, which is 16 cents. And then you divide your stop value by your R, or you divide your R by your stop value. So you go 60 divided by 0.16 equals 375. That is the amount of shares that you go short. And then from there, you just kind of follow your plan. And you ask yourself, all right, well, what do I do from here? That part, ladies and gentlemen, it is up to you. You can create whatever plan works, whatever you want to do, whatever you want, however you want it to work. What oftentimes, what a lot of traders will do is they exit half of their position at 2R. Okay, so we have 375 shares here. You exit half that. So this was 16 cents. Twice times that is 32. 32 cents minus 41.75 since we're going down. It's 3, 4, 41.43. So that's right about here. So this green line represents 2R. So at that location, you would exit half of your position, which is what? Almost 200 shares, 145 shares, something like that. So you exit half. You would do that by buying to cover. Then you just simply take your stop and you start moving it down. You just start trailing the 5-minute pivot. So here's a 5-minute pivot. This little guy right here, boom, boom. All of this becomes a 5-minute pivot, boom, boom. And you're still in this trade. You're still just trailing. So your stop on this right now is going to be about 41.26. That's where your stop on this particular trade would be right now. 41.26. And so you've already locked in 1R worth of profit. You have half your position on the table. And now we're at the low of the day. And the low of the day is always a good place to usually exit your position. So this all comes down to your plan, right? If you want to exit a quarter of your position, the rest of your position, a third of your position, an eighth of your position that's remaining, whatever it is, as long as you create it and you stick to the same thing every single time, I'm fine with that. The vast majority of the time, I will take a little bit of profit off the table if I'm at a very obvious target. If I'm at a no-brainer obvious target, which in this situation is a no-brainer obvious target, right? You're at this giant wick where everyone bought before. You're down here again, and you're down here again. I would exit a quarter of my position, leaving the rest of the position just a trail. And in hopes that this is going to be, a 2.5R, 3R trade at the end of the day, you're good to go. That's a great day, even if you take this one trade. So let's not underestimate the thing that makes this gap the most beautiful of the airlines, at least in my opinion, when I was looking at this morning. If you guys had to tell me, what is, in your opinion, what makes this gap the most beautiful of all of the airline gaps? Because Delta and American Airlines and Southwest all gapped down pretty nicely this morning. What makes that one the most pretty? I'll see what you guys think. Because that's just my opinion, right? I could be wrong. Zane said break of distribution. Yep, that's correct. So here's your little distribution phase right there. And it gapped below there, and it did get below your simple moving average. Yes, absolutely. Cheryl said it cleared the pivots and below the 100 simple moving average. Yep, another really, really just glorious location. Cleared all recent pivots, yes. Here's something that I've kind of found out, and I don't think I've told you guys this yet. This is a really, really good little tidbit of information. You guys ready? When a gap clears a pivot, but just barely, it makes it a stronger gap. Let me tell you what I mean by that. So on Southwest, here are your pivots. Right there, this little green line. That's your pivot. If Southwest would have opened here, or here, or even here, those would all be pretty decently bearish gaps. The red would be interesting. The blue would be interesting because both of those now are kind of at some pivots. Right? So here you go. Here's one pivot. Here's another pivot that you're kind of at. Pink would have been a good gap. Definitely one that I would have kept an eye on. But if a gap opens just right past a pivot, just right past it, just a few pennies or a point or two, it makes it a much stronger gap. Now the question you guys are probably wondering is why? Why is that? Well, the reason is, number one, it has more room to go, which is a company, has more room to go, has more room to move. So the people who are trading this short, right, they think that there's some opportunity left because if it gapped down here, they would probably, some of the short traders might say, well, it's kind of gapped a little bit far. Maybe I'm not going to do anything there. Right? Maybe they don't do too much. However, fact remains, okay. TradingView is doing that thing that does again. I don't know how to fix that. Give me a second. I don't know what I do when I do that. Anyway, so when a gap just simply gets a few points past a pivot, that makes it a stronger gap. Case in point, just the other day, you guys took this gap right here, ONN. And notice, this was a good gap and it did work. But as of right now, it's kind of playing out to be a little bit more of a bullish gap. Oh, when I say bullish, I mean you're getting some bullish pressure. Had we opened right here rather than right here, it would have been even a stronger bearish trade. It still worked, but oftentimes, if it just barely clears a pivot, just barely, but does clear it. Case in point, right there and right there, those become very strong gaps. When they clear a pivot and they trap some people, but just barely. So if we come over here to American Airlines, we can see that American Airlines was a pretty decent gap. It's cute. It's a nice gap. It's a retest gap. So the April week one $45 put sale expired worthless yesterday or over the weekend. So now we got this $49 put sale that we might get put to stock, and it is all the way till April, so we have 2 entire weeks to find out. But American Airlines, it was a decent gap. It still is a decent gap, but did it clear any pivots, yes or no? Catherine says no. Anyone else? Marsha says no. Cheryl says no. That's the correct answer. It doesn't. It doesn't really clear any pivots. Had it gap down here, it would still be a good gap. It would. I would definitely keep my eyes on it. But as soon as I saw it today, I was like, well, Southwest looks better. Because you have all of this resistance here. You have a support line, 44.80, or at least I do on my chart. You know, it's a decent gap. And if we're going to play it, we would come over here to the 5s. Here's the 5 minute. All right, here's your exponential moving average that you're keeping an eye on. And you can see that it did come into the 10 over here, and it did fail. I don't think it failed nearly as pretty as Southwest did, but it did fail at some point. It wasn't as profitable as of a gap, and that's usually the case that happens. If you go and you find an okay gap at best, they usually become not massively profitable. They just become an okay gap, and that's what this is. This is an okay gap. Now, if we come over here to Delta, DAL, Delta Airlines. Delta Airlines was also a decent gap. It was. But it didn't really clear any pivots. In fact, it gapped down to a pivot, which was this gap right here, this resistance right here. Now, Thursday's candle closed below a pivot. Right? It did close below a pivot, which is this little support line. So you're making lower lows. I agree on that for sure. But there's not any massive shock value here. There's not tons and tons of people who are they don't really know what to do. Here's the 5 minute. And you can see that there's a little bit of, bearish move at some point on this one too, but it kind of opened, trailed up. You might have been able to take it here. And as of right now, it's just kind of been pinging and ponging back and forth. So the difference in the 3 gaps, which is very, very interesting, I think this is a great day to talk about this, is really just simply the location and the type of gap between all 3. Delta was a good gap, but it didn't trap that many people from today. Right? Beginning on Thursday, people were already probably going bearish on a swing level. They probably already kind of got in. So remember, the prior day, you want people to really have no idea what's going on. You want people to be scared, to be shocked. And that's why Southwest is the better of the 3 gaps, because here's pivot 2, here's pivot 1. Everything else, there's nothing really there. All of this is just congestion. This is not a pivot. A pivot is just a clear point where people are going to place stops or triggers. And we know people bought off of this support because we can see it visually. We can see the hammers. And the fact that it just cleared that support level, just cleared that pivot, makes it a stronger gap. Now, if you're being really aggressive, here's the 1 minute on Southwest. And again, you wouldn't really have had the ability to play the 1 minute. I mean, it just kind of really took off in the morning, just very, very fast. Kind of came back up into here, and again, you might have had the opportunity. Maybe you did that trade. You probably got stopped out or very, very close to it over here. Again, we'll talk a little bit more about the 1 minutes later, but as far as a 1 minute trade, I only watched the 1 minute the first eight minutes of the day, and I'll start to switch. That was the entry right back there. Just a really, really beautiful entry on the 5. Picture perfect. Exactly where you wanted it. Gorgeous trade. Gorgeous trade. Gorgeous gap. Stole my heart. So now, what are we doing now? Well, right now, we're at low of the day. You've made lower highs. So we've looked at the 5. So here's the 15-minute chart. And this is a hard rule to talk about. Well, I shouldn't say hard rule to talk about, but it's a unique rule. It's more visual than anything. But I'm going to give it my best shot. It's a mental rule that I've tried to write down, and I don't think I can get it clear as I want it to. But anyway, here it is. If you get a very, very quick move in the morning, followed by a retest, and then a rollover, it looks like this, and you get to the low of the day, okay? And we have not touched the 10 exponential on the 15-minute chart, you're going to want to take profits off the table. Either most of them or all of them. And then get ready for either a bullish bounce like this into the moving averages, or a slow grind all day and then maybe a rollover in the afternoon. Because the 10 exponential moving average on the 15-minute chart is a really good catalyst to continue a trade. And if you haven't touched it at all, especially when we get there to the afternoon, this is not the time to go short. Right? A lot of people will short a retest gap after a really quick sell-off. Here's the retest, boom, 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 and they'll get in the middle of it when the 10 exponential on the 15-minute chart is so far away. So they'll take a trade like this, entry, stop, and target, which is a 1-to-1-to-1, which is not a horrifically horrible idea. But oftentimes, what will happen is you'll do this, they'll come back, hit the 10 on the 15, and then roll over. So bottom line is, if you miss the retest on the 5-minute, keep a very, very close eye on what the 10 exponential is doing on the 15. Because you do not want to short it when it's very, very extended, when it's very far away. Quick sell-off, quick retest, rollover. You do not want to short right here. At least not yet. And that's how I know. As soon as I looked at Southwest, type in a 1 if you guys heard me say, we're not going to want to short here. We're going to wait. We're going to want to wait. It said that about 10 minutes ago. Because the 10 exponential, I just knew from looking at the chart, it's going to be too far away. So we want this to happen. And if that happens, we can short it. Okay, so here's the low of the day. And if this happens, the 10 comes down, we start pressing it down, and then it breaks, then we can consider going short. But this happens a lot. A lot. Where people try to go short down here, you're near the low of the day, you're already extended, and the stock will bounce. So this is oftentimes where I will take the majority of my position off the table, if not all of it, and just go look for something else. Justin said, I've seen that work a lot. It's like a rubber band pulling up to the 50 exponential when it's been below the 10 for so long. Yes. So my prediction is that we will touch this exponential moving average before breaking this low. That's my prediction. Now, Gaston, that's a phenomenal question. And I'm going to answer it 2 parts. So, Gaston, very good job, man. He says, if it breaks the low of the day, do we wait for a retest? And same answer with, if we break the high of the day, do we wait for a retest? And it's a hard question to answer. And here's the way I will answer it, though. If you write down that you want to wait for the retest, always wait for the retest. Pick one and stick with it because they both work. How many times? Can you guys imagine? Give me a percentage. How many times do both strategies work? When you don't wait for the retest and you do wait for the retest. Ironically enough, they work about 50% of the time. Which one is which? Really, they both work 50% of the time. So if you wait for the retest, you'll be right about 50% of the time. If you take the breakout, you'll be right about 50% of the time. If you're a retest kind of guy or kind of gal, cool. Create that as part of your plan and always do it, always. Get so good at it that that's all you do is you always wait for the retest. You never take the breakout. I'm a breakout kind of guy. I've figured that out. That's just how I am. But I will wait for a breakout much longer. What I mean by that is I'll sit here and watch it. And Gaston, if you do like the breakout patterns, time is of the essence. And what I mean by that is you really want this thing to just boom, 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 boom. And right towards the end of the day, poof, You wouldn't be able to catch it right here, right there, and this is going to be a very quick trade. Pat says, but if you switch back and forth randomly, you'll be wrong 75% of the time, LOL. You know, it's funny that you say that, Pat, but that's kind of true, as ironically as it sounds. It's one of those things like if you're playing roulette and you have a strategy, but you mix it back and forth between black and red, and you don't really stick to the strategy, at some point the odds will shake against you. That's just the way math works. Pat says, oh, I know it is. I've lived it. Yeah, that's why, I've said the market rewards the specialist. As painful as it is to do the same thing all the time, as boring as it is to do the same thing all the time, that's what you must do. You got to, at some point in your trading, pick whatever it is that juices you up and do it all the time. Whatever that might be. Now, I agree that some strategies are better for other personalities. It is a personality trait. And it really does depend on what you like to do and that type of thing, which I'm fine with, by the way. That doesn't bother me. I can appreciate that. But at some point, you just got to pick one, and I can't tell you which one's right because they both do work. And I can tell you can do either or, but you've got to pick one. Type in a 3 if you guys have noticed that I'm more of a breakout person anyway. I usually take the break. I tell you guys, hey, if you want to take the retest, you can take the retest, but I will take the breakout. I'm a breakout kind of guy. There's nothing other than that. I just am. I take breakouts. But I've practiced it so much that I also know, right, there's a time issue involved. And I know that the longer, let's just say hypothetically, Southwest does do this, right? Boop, 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 boop. The longer it trades, if it does break out, it's going to be very, very fast. So I'm going to hop on it. I'm going to hop on. It'll be very quick. Oftentimes it does this, this, and then this. Which I don't mind necessarily holding through this little thing. I really don't. Because sometimes that doesn't happen. Sometimes it just does this. I've been in both situations more times than I can count. Sometimes it retests, sometimes it doesn't. How many times? Usually about 50%. Now, who wants to know why? Why do retests happen? The why behind a retest is if the stock is doing this and we break. Okay, we break lower. A retest occurs when the people who have been in the trade already begin to exit for a profit. I'll say that again. A retest happens when people who were already in the trade begin to exit for a profit because it makes a lower low. Does that make sense, ladies and gentlemen? So if, let's say, Gloria went bearish back here. Gloria is a beast. Gloria is in bearish. Boom, boom, boom. She's waiting. She's waiting. She's waiting. Boom. She becomes profitable. Right about there. Nice and profitable. So she breaks a low. That's what she wants. She wants just a little bit more money. You know, she wants to hit her target of 41. Her target's 41. Here's 41 right there. So she wants to make a little bit more money. So when the stock breaks lower, what does she do? She buys to close. Not only will Gloria do that, but a lot of people will do that. So that's what causes the retest, the buying to close. And then people who didn't get short in, they begin to go short. And then the question is, who wins the battle? Are people buying at this point for a discount and they're buying to close, or are people just simply buying to close, and will the bearish trade continue to roll over? Guys, if you play roulette, the odds are always against you. This is phenomenally true. Yeah, absolutely. Best odds you have, I guess, in poker, or in the casino, was poker and blackjack. I think those are the best odds. But the house always wins in Vegas. And truth be told, ladies and gentlemen, here's what's scary. But I'm just going to go ahead and tell you this because I've lived it. I've been doing it for 6 years. It's in my nature now, and I know this. The stock market is Vegas. It is the house. Who always wins? The house and the house, right? The house always wins. The market will always win. How do you win? How do you win? Well, I'll ask you this question. Who wins in Vegas consistently? Who are the people in Vegas who win all the time? It's the people who do the same boring thing over and over and over again. They play when they have an edge. They wait. They are patient. They are calm. They know when to walk away, and they know when to not walk away. How is it that Phil Ivey places in the top spots all the time in poker? Is he just a sensationally good poker player? Yeah, he's really good. Has he been playing for a while? Yeah, he's been playing for a while. Does he do the same thing all the time? Yes. Blackjack players. Poker players. I mean, whatever it is. Craps. Can people win in craps consistently? Yeah, sure. Do I know how to do it personally? No. But it all comes down to having a plan, ironically enough. So yes, the majority of the reason that people lose in Vegas and people lose in the stock market is because they go into it blindfolded. They do not have a plan and they don't know what they're doing. Anytime I've ever played in a casino in the past, I go in exactly knowing I'm going to make this much or I'm going to lose this much. You go in and I'm saying I'm going to do this, this, and this, and that's it. That's all I'm going to do. If I win, I win. If I don't, I don't. That's how much money I'm going to lose. Has Warren Buffett lost money? Has George Soros lost money? Has Carl Icahn lost money? Yes. They've all lost money, a lot of money. But they've also made a lot of money. Why? Because they do the same thing all the time. It's just discipline. And as, I don't know, fluffy as that sounds, that's it. It's just being disciplined and doing the same thing. Because anything you do in the market can work. I mean, unless your strategy is just outrageously wrong and needs a few tweaks, which I come across that every now and then, but not very often. I've come across it every now and then. In which case, we'll do a little bit of tweaking, and that'll be that. But, yeah, anyway, Southwest, great gap. Great retest gap. Clear the pivot perfectly. Good one to take. Good one to keep your eye on. Pat says, never been to a casino, but a friend uses that strategy to great advantage. Oh, you've never been to a casino. That's cool. Does that make sense, ladies and gentlemen? Any questions about that so far? Ironically enough, I haven't looked at any of the gap ups today. Well, I've looked at Tesla. Brad said, will there be a casino on the cruise? Yes. It's usually in the middle of the boat on a particular floor. Oh, wow. That was me trying to spell Tesla. Jeez. Way to go, Newsom. Okay, so Tesla. I want you guys to tell me now. This is what's interesting about Tesla. I'm actually going to go mixed up just a little bit. I'm going to go to the 1 minute chart on Tesla for the moment and look at the 1 minute this morning. So the 1 minute, you can see you got a little bit of a little bit of rotation, a little bit of bounce. Could have had a few opportunities. Here's the 5 minute on Tesla. Here's your 5. Again, high wave candle. There's your little flag pattern. There's the breakout. You can see it never really totally looks back. Why did Tesla have a good quick move this morning? Who can tell me? Because there's a lot of I'm gonna try to hide as many things as I can here for just a moment. Why did Tesla have a pretty crisp, good gap this morning? News, okay, that's one reason. Sure, I like news. What else? A lot of people buying to cover. Yep. John Compton says the TL break. Guy said 10,000 cars sold over the last quarter. Brad Reed says mini double bottom. All those are correct answers, by the way. Here's what I was looking at. Crisp pivot. You guys tell me on a short-term time frame, what's between the pink line and the green line? Nothing. Gaps don't have to necessarily be outrageously big or outrageously small or whatever to work. What they have to do is they have to go to locations where there's no one at. where people are afraid. So for example, if Tesla, same exact thing, would have gapped to here this morning, we would more than likely have the exact same candle, but a black one. Probably almost identical. Why? Because it's just, you're taking out these support levels, these pivots, and of course you're taking out the wicks of these guys right there. But when this gapped up, I mean, you're just taking, this is just such a nice, if you come into the hourly, let's look at this on the hourly for just a moment. You guys can see that there's really just here's your hourly pivot. There's nothing there. It's clean. There's no random wicks. There's nothing there. And the fact that it gapped above here and it's gapping to this black candle, there's really nowhere else for it to go other than, here's where it opens, other than here. There's really nowhere else for it to do. I mean, maybe it could have filled, but if you're starting to look at this on the 5 minute, you're starting to trade this, I think this is a good opportunity. So what do we do now on Tesla based on this gap? Well, now we can see that we had a white candle on the hourly. We're trapping some people. We can say to ourselves, all right, this is kind of a more bullish than bearish gap. So now we're at this pivot right here, this resistance at 205, 204.90. If we pull back to that on Tesla and we bounce, that's bullish sentiment. That's a little bit of a bullish setup. Let's look at Tesla again on the hourly, and let's just hypothetically plan for tomorrow. So ladies and gentlemen, where are we at right now? This is Tesla. This is the hourly chart. So you can see we're going all the way back to like mid-February with this chart. What if Tesla tomorrow opened right here at 212? Is that a pretty bullish gap in your opinion? Yes or no? Yeah, it'd be a pretty bullish gap because number one, you're taking out the resistance of today. You're getting above this pivot, you're getting above this pivot, and most importantly, you're getting above this pivot. So overall, you're going to wait, you can see where you're opening. You're likely going to be bullish up until about 218. Because again, you're just simply sniping out those pivots. Just kind of avoid. There's really not that much there. So in my personal opinion, now going back to the daily, so here's a little pattern that we have. We do have some lower highs, so this is the daily, so that's kind of what we're running into. So we're running into that little pivot, we're running into this little resistance. So yes, on Tesla, I'm waiting for some small pullbacks, and I'm going to be playing the bounce. So on Wednesday, Weekly's Wednesday, we might be considering a weekly spread. The 175, 170 that we got into on the 2nd really isn't worth a lot anymore. I got a buddy who got into the 192.50, 190 expiring this week. So as far as the spread's concerned, you're at some resistance. You do have some good volume. If this retests and bounces, yes, in my personal opinion, the edge is bullish. So hold on to your calls that you still have. Hold on to them. Nice, Pat. Okay, so there's Tesla. What else is gapping up today? PBR is always gapping. ABX, CHK. Let's go look at ABX really quick. ABX gaps pretty often. Gaps pretty often. Good thing Prasad exited, right? He followed his plan, mitigated his risk, lost an R, but that's all. So it's a cute little gap, right? We gapped above the, gapped above the wick. Obviously, it would have been a little bit of a bullish retest. Here's the 5 minute. So it was good because it just barely, just kind of barely gapped above some of these wicks, took out some of these candles. So it's a little bit more of a bullish than bearish gap. So here's your hourly. So we're looking for, obviously, something like this for a swing trade or something. Was it the greatest gap of the day? No. No, it wasn't. But what I did like about it is it did just, here's a pivot. There's really not tons in the way of ABX. Just from going a little bit higher, something like that. Yulette says, are you taping this? Yes, ma'am. Mentorship Monday, all 3 hours. All 3 of them. So there's a gap. That was an okay gap if you're watching it, right? You didn't get soiled. CHK, CHK was another okay gap. It wasn't that spectacular. Ladies and gentlemen, on a 1 to 10 scale, 10 being the most bullish gap, that you would watch it for sure, how would you have rated it if it opened at the pink line? On a 1 to 10, how would you rate that? Brad's giving it a 9.2. Pat's giving it a 1. John's giving it a 2. Cheryl's giving it an 8. I love the dichotomy here. This is beautiful. Let me actually re-ask the question. I apologize. Let's pretend that today's candle hasn't happened yet. So let's say we have this candle, and it's opening right here. So we do not have today's candle. So I guess I should re-ask that question. So we're gapping from yesterday to today. Today's candle doesn't exist. And instead of opening where we opened, we open at the green line. Now give me a rating, 1 to 10. And we're going to see some different viewpoints here, which is I like that. I like the different viewpoints. I would give it a high 8. Brad's giving it a 9.3, 598. I can dig that. I would give it a high 8. Why? Well, it would obviously be a bullish retest gap because the prior candle is white, but you're gapping above this pivot, which is obviously a strong pivot, and you're taking out the open of this black candle. How many people do you think went bearish right there and are probably having their stop right there? Probably a lot of them. So if it opens above this pivot of this candle, that would be, in my opinion, more bullish, especially since we're doing something like this, right? So you have today's candle, so we would have gapped above this pivot, and we would have gapped above this pivot, making it a little bit more of a bullish gap than a bearish gap. Again, at least in my opinion. Jay, yep, she's right. She said, meaning that it opened above the black candle, it's a little bit stronger. Yes. Meaning me personally, I would at least keep an eye on it. I'd keep an eye on it because it's taking this pivot out. Would it have worked? I don't know. It's worth keeping an eye on, I would imagine. What's interesting about this candle right here, this gap, is the fact that it just opened below that really strong hammer candle. And you know that there's going to be some people with some stops right there in that hammer. So there's pivot 2, there's pivot 1 right here. So it took out that, boom, boom, really pretty gap down. Retest gap, here's the retest, here's the follow through. Traded back down to support, kind of bounced a little bit. Same type of thing over here. Almost identical. Boom, boom. Very similar. Look, opened right below the pivot of those hammer type of candles. So that's kind of what you look for. You just look for people being trapped based on the gap. Seadrill probably not doing too much. Yeah, it's a nice little gap down here. I mean, this is an area to be a little bit more bullish than bearish. You're in an accumulation phase. So if we close above here on Seadrill, I would kind of consider that to be a little bit of a double bottom. RIG. RIG, so you're getting a little bit of a candle. Karen's got her $9 put sale. Get a little bit of a double bottom. So again, we got that accumulation phase down here. We'll probably retest a little bit tomorrow and then likely continue this little channel thing down here. I don't know what USO is doing. Let's just see what USO is doing. USO, there we go. Making some higher moves. My target's kind of 19 on this guy. So there we go. Any other questions about Gap specifically? Anything that's on your mind? Anything you're thinking about, considering about? Possibly, maybe. Down, 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 down. Boom, boom, boom. Carly Rae Jepsen. Why do I have Carly Rae Jepsen in my head? Oh my goodness. Not good. Not good. All right, well, let's pause the first hour then. Let's go ahead and stop.